Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Minda Industries Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sunil Bora, Group CFO, Minda Industries Limited. Thank you, and over to you, Mr. Bora.
Thank you, Rutuja. Good evening, everyone, and a warm welcome to all the participants. I hope you and your near and dear ones are all keeping safe and healthy. On the earnings call today, I am joined by my colleague, Ankur Modi. We hope you had a chance to look at our financial results and presentation that is uploaded on the stock exchange as well as the company's website. I would like to run you through the business landscape and then update you on our performance in Q3 and 9 months of FY22, following which we will be happy to respond to your queries. Before deep diving into business performance, let me shine some light on the industry highlights for the period. While the pandemic is not yet over, there is a growing optimism about country's economic recovery. The government's focus on spending more on capital expenditure augurs well for the economy as a whole, and we will have significant multiplier impact on the economy. Auto industry is around 7% of the GDP and around a third of manufacturing GDP. And there is an old saying, when auto industry sneezes, the economy catches cold and vice versa. Hence, once overall economy grows, the auto industry is expected to do better. The auto industry, like several, was not immune to the drastic impact of the pandemic, but is now seeming steady and ready to launch into its next gear. The transition towards electric mobility is underway in two-wheelers and three-wheelers, signaling an electric revolution. The government's proposal to implement a battery swapping policy for EVs with better interoperability in standards is expected to benefit the entire ecosystem, particularly the electric two-wheeler and three-wheeler segments. While we look forward to the intended regulation being rolled out, once done, this move may help mitigate one of the biggest hindrances to adoption of electric vehicles in India, that is, the upfront cost, range, and charging anxiety. The private sector will be encouraged to develop sustainable and innovative business models for battery or energy as a service. This will improve efficiency in the EV ecosystem. The budget also announced the implementation of clean and electric vehicles in the commercial vehicle sector. This move will help increase manufacturing of electric buses and electric commercial vehicles for public transport, thus reducing the dependency on fossil fuel vehicles, while providing the impetus to players like us to develop better solutions to serve them. With the government announcing and implementing various PLI schemes, including one for auto and auto components, and the recently announced semiconductor manufacturing scheme, the government support for the industry is evident. We firmly believe this will be a game changer for the country and will help long-term growth of the economy with significant job creation and in turn increase demand as a whole. On auto PLI, we saw overwhelming response from the industry with a total of around 115 companies applying for the scheme, including us. Multiple products from the company's portfolio are eligible for the same, including but not limited to sensors, controllers, ADAS, RPA systems, alternate fuel systems, EV-specific products, and more. It aligns perfectly with the company's belief that the next level of change will not be only commodity-driven, but more of technology-driven, and stronger and larger players may be able to capitalize on the opportunities faster. However, since the entire auto supply chain is so closely knitted, it will help create demand up to Tier 3 and Tier 4 as well. The semiconductor availability is gradually improving. However, challenges still persist. We are witnessing gradual improvement in PV volumes month-on-month basis. Silver lining is that PV demand remains strong. Along with semiconductor issue, industry continues to face strong headwinds in form of increasing raw material prices and input costs since few quarters, which continued in last quarter as well. The inputs used in the production across diverse product portfolio of the group, for example, aluminium, copper, nylon, and brass sheets, etc. The prices in the current quarter stands higher by 60%, 22%, 25%, and 21% respectively vis-a-vis FY21. In terms of auto industry performance during Q3 of FY22, we saw a production of 8.95 lakh units in passenger vehicles, down 12% year-on-year, and production of 45.49 lakh units of two-wheeler sales, down 23% YOY basis. While Q3 FY21 saw strong demand post easing of lockdown, to which industry also capitalized. However, due to supply side constraints, production numbers in some segments remained subdued in Q3 of current fiscal, in spite of healthy demand. The two-wheeler segment, however, was on different trajectory in terms of demand when compared to PV, and is yet to catch up. High cost of ownership, tough rural sentiment, work from home, and latest threat of Omicron continued to impact sales and consequent production. However, overall, we remain cautiously optimistic in the near future and confident of long-term growth potential of the economy and hence the auto sector. Moving to key operational highlights, you may refer to slide number 5. During the quarter, we had announced entering into a JV agreement with Freevo, thereby enhancing the already impressive EV product portfolio. We are progressing well with separate legal entity already incorporated. We have finalized the location of the new plant for the JV, and land acquisition is expected to complete in the current quarter. The plant is expected to be ready in around 15 months post-commissioning on ground activities. The contract manufacturing will also start in H1 of FY24. Till the new plant starts commercial operations, JV will endeavor to serve its orders and contract manufacturing commitment using our controller division facilities in Pune. In addition, during last quarter, we have entered into a licensing agreement with Dama Innovations for its temperature-controlled automotive seats. Under this agreement, Dama and MIL will launch series of heating and cooling seats for the automobile industry. The board of the company had also approved a capacity enhancement project of 2 million two-wheeler alloy wheels per annum and 0.36 million four-wheeler alloy wheels per annum, thereby further building upon strong capacity foundation. All these have been covered in detail in our special call, hence we are not going into any more details. As was informed in our previous post-results call, we have been actively engaged with top 6 to 7 new age two-wheeler EV OEMs for supply of EV as well as our traditional products. We are happy to inform that we have secured orders of more than 400 crores of peak annual sales value from these new age OEMs. The peak sale is expected in FY25 as they ramp up production with increasing adoption of two-wheeler EVs. Coming to financial and operational performance, you can refer to slides 7 and 8. At a consolidated level, the revenue from operation for the quarter increased by 7% year-on-year to 2181 crores from 2031 crores in Q3 of FY21, while revenues increased by 3% quarter-on-quarter in spite of supply side constraints adversely impacting auto industry volumes. On the other hand, the volume of auto industry declined by 21% year-on-year basis. The company reported 5% growth largely on account of ramp-up of two-wheeler alloy wheel sales, growth at all businesses including aftermarket division, except at acoustic business in Spain, and price increases on account of increase in raw material prices. EBITDA for the quarter was at 235 crores, while the same for the corresponding quarter was rupees 279 crores. The EBITDA margin for the current quarter is lower at 10.8 from 13.7 in comparison to corresponding quarter last year. As was explained in last quarter, there were two broad reasons for lower EBITDA margins year-on-year basis. First, sustained raw material pricing pressure. Second, excess manpower which we have to keep due to higher indents and to ensure readiness for higher production. While we are largely able to pass on the raw material price increase to customers in line with various agreements, which usually happens with 1 or 2 quarter lag. So while we might get previous quarter or 6 months average price, spot prices if higher than average impacts negatively. Also, the higher denominator, which is the sales to that extent, is margin dilutive. Interest cost for Q3 FY22 stood at 13 crores, which was sharply lower than the interest cost in the same period in the previous quarter on account of repayment of part of our borrowings from the QIP proceeds. Depreciation decreased by around 2.6 crores to 94 crores as against 97 in the previous quarter on account of MSIP's capital subsidy benefit received during the quarter at our sensor division. The profit after tax at which MIL's share for the quarter was at 101 crores as against rupees 115 crores for Q3 of FY21 and 95 crores in the previous quarter. While we do look at ROCE on annual basis, just for information, since Q1 was significantly impacted due to COVID, the ROCE for Q2 and Q3 stands at around 18%. On similar lines, the performance for the 9 months ended 31st December was also higher, with the revenue standing at 5,898 crores in comparison to 4,136 crores for 9 months of FY21. The EBITDA for the same period in FY22 is 610 crores in comparison to 423 crores in the corresponding prior period. Talking about margins, EBITDA margins were higher at 10.3% in 9 months as against 10.2% in the prior 9 months. We would want to highlight that both period of 9 months were impacted by COVID waves. First wave there was complete lockdown in Q1 of FY21 and in second wave partial in Q1 FY22. Coming to the business segment-wise performance and moving to the product lines, starting with switching systems, you may refer to slide number 10. The segment achieved revenues of 638 crores for Q3, contributing about 30% of consolidated revenues. As was highlighted earlier, we have won orders from two-wheeler new age EV OEMs for switches. We have also commenced production and supply for export order for our marquee American two-wheeler OEM, which was announced a few quarters back. Moving to lighting business, which has achieved a revenue of 487 crores for Q3, contributing 22% of our consolidated revenues. We continue to strengthen our position in LED headlamp with receipt of another large order from a Japanese four-wheeler OEM. We have received orders in lighting also from EV two-wheeler OEMs for lamps as well. With increased focus on ASEAN, we have made good inroad with large order from Italian two-wheeler OEM for tail lamps and blinkers at our Vietnam plant. Moving to our casting business, which has achieved revenue of rupees 355 crores for Q3, contributing to 16% of our consolidated revenues. As is the case in other business segments, we have received large order for pillion grip and alloy wheels from a new age two-wheeler EV OEM. All 4 lines of two-wheel alloy wheel plant has been commenced now, with 4th line during the quarter, and we have started supplies to 2 more OEMs. In view of the demand, we had announced expansion by another 2 million wheels per annum from two-wheeler alloy wheel plant during the last quarter. Demand and orders for PV alloy wheel is also very promising, leading to announcement of expansion here as well during the last quarter. As was informed earlier, supplies to Korean PV customer with LPDC technology has started, and we have subsequently received more orders from them. Moving to acoustics, slide 11. Our acoustic business has achieved revenue of 151 crore for Q3, contributing about 7% to consolidated revenues. Performance of our European subsidiary Clarton Hall, which contributes majority of acoustics revenue, remains subdued and significantly impacted by volume drop due to semiconductor shortage. However, indents for Q4 are better, signaling situation is improving gradually in Europe as well. Locally, we have received order for horns as well from the new age EV OEMs. Moving to our seating business, which achieved revenue of 236 crores for Q3, contributing 11% of our consolidated revenues. While CV/OR segment remains strong, sluggish demand in two-wheeler impacted the performance. We have secured orders here also from two-wheeler new age EV OEMs for seats as well. Moving to other product business, which have achieved revenue of 315 crores for Q3, contributing 14% of overall top line. Other businesses mainly comprise of sensors, blow molding business, pieces, battery, aftermarket, which is the trading part. Battery and aftermarket division continue to show strong growth, with ICs also reporting higher sales led by product sales. We have received additional orders from a couple of OEMs for wireless chargers, to be positive for our control division. The share of profit loss of associate joint ventures for Q3 is at 19.5 crores as against roughly 9 crores in Q3 of FY21. All our JV associates, including infotainment JV with Denso, our safety system JV with TG, our CNG product JV with Minda and Rocky, have contributed positively, with only exception of Minda Aluminium. Recent announcement relating to mandatory 6 airbags would be positive for our JV with TG, while move to cleaner energy like CNG is aiding good growth. We can move to aftermarket and export, slide number 13. In terms of our revenue pie for the quarter ended December 31, OEM business accounted for 88% and aftermarket accounted for 12% in Q3. Our aftermarket division has done well with revenues of 262 crores as against 223 crores in Q3 FY21. The aftermarket division continued its growth momentum in Q3 as well. We are also increasing our focus and efforts towards aftermarket branding and marketing. Our sales from international markets, which is export from Minda, India, plus sales from overseas operations, stands at 14% of total consolidated revenues. International sales growth was led by ECs and Delvis, both in quarter with their innovative products in the European market. Moving to our cash flows and debt levels, our net debt as of December 31st was at 413 crores compared to roughly 800 crores on March 21, and our net debt to equity stands at 0.11. The net debt has significantly reduced on account of prepayment of part of our borrowings from QIP proceeds. Moving to slide number 14 on strategic business update. First, merger of Minda iConnect with Minda Industries. The meeting of shareholders and creditors is scheduled to be held on February 16th. We had to file to appellate tribunal to amend the initial order requiring 10% of shareholders' presence and voting, which was not practical, causing a couple of months delay in convening the meeting. Post this meeting, it will take another 3 to 4 months to complete the merger process. Additional investment in Windaposta Aluminium. The board has approved subscription to right issue of Windaposta Aluminium at a face value of rupees 10 per share, and issue price also is 10 per share. The joint venture partner has renounced their rights in our favor, enabling us to increase our stake in Windaposta Aluminium from 70% to 77.35%. Total amount to be invested by of right issue subscription is 61.2 crores. Windaposta Aluminium has significant growth opportunities with increasing penetration of four-wheel alloy wheel. While penetration of alloy wheel is also increasing, however, still remains low in comparison to developed countries, providing ample growth opportunities. With capacity expansion announced at both the plants, which is Bawal and Gujarat, capacity is expected to increase from current 210,000 wheels per month to 330,000 wheels per month by FY24. The third being consolidation of partnership firms. As you all would remember, the company had initiated the consolidation exercise a few years back, as part of which stakes owned by the promoters of the group in various entities were transferred to Minda Industries Limited at or close to book value. While all group companies were transferred to Minda Industries Limited in the last 2 years, there were 4 partnership firms where promoters held some stake along with the third party. The company is now consolidating that stake in these partnership firm by acquiring remaining stake of promoters effective from 1st Jan 22. The aggregate investment of around 17.5 crores for buying remaining stake. To note here, the additional attributable profit from these entities for FY21, which was a year back, was around 20 crores per year. In line with the commitment, the transaction is being done at book value by promoters. The move will further simplify the holding structure and improve transparency with significant reduction of related party transactions. This concludes our consolidation exercise with all group companies, with all auto component businesses have now been brought under the listed entity, barring the joint venture with Neptesco, which the group is planning to exit in near future. With this, I would like to now open up the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to limit their questions to 2 per participant and use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Jhawar from Investec Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. I have 2 questions. First is, Sunil, if you can break up the order book of that 400 crore on EV components into the components which are engine agnostic, like conventional product like switches and LED, and the new age EV components.
Mm-hmm.
Yeah, that's the first question.
Yeah, and second?
Yeah. The second question is that on, continuing with the same topic, if we have to look at the profitability on EV components as well as the current component like switches and lights, supplied to EV, how different it is from the base segment profitability?
Right. So thanks, Aditya. So this breakup of 400 crore, honestly, we have not shared as of now, but it includes both, as I mentioned in some of the categories as well. It includes both the existing components and the EV specific components as well. Maybe once we mature enough and start having separate segment maybe for EV, that time we can share a little more in-depth information. But as of now, it includes both. And I'm sorry, we are not able to share at this stage the split of how much is the EV specific components and how much is the EV agnostic components. And in terms of profitability, Aditya, profitability is broadly in line with our existing margin, be it for EV components or be it for our traditional components or the old agnostic components, which is switch light. So broadly, I would say in the same range of the existing margin plus minus percent. So not very significantly different.
Okay, that's very encouraging to hear. The final question is on capex. So if you have to, look at the capex for the next 3 years, what should be our total capex and specific capex that you have chalked out for EV order wins that we already have to be executed over the next 2 years?
So Aditya, you know that we normally do our budgeting exercise in February and March, and then along with our annual results, we share the next year's capex. But broadly, I can share the directional numbers. So we had a lumpiness in our capex few years back when we had 6 new plants in Gujarat and Chennai and Hosur for our two-wheeler lighting, four-wheeler lighting. Lumpiness was in the past, but definitely if the kind of growth we have sort of slated for ourselves in future, we would need to have, at least 1 or 2 plants in the near future almost every year to see that we are able to meet those growths. But in terms of sustaining capex, at our current level of operations, it will be roughly around in the existing range of around 300 crores, which includes not only sustaining but also includes the incremental brownfield capex needs. So it will be 300 plus minus some 10% here and there. Too much of
Does that answer your question, Mr. Jawar?
Yes. Final question, if I can add just one. Sunil, on the raw material side, are you seeing some kind of softness in this quarter, and possibly is the worst behind, and from Q4 onwards we could start seeing some raw material?
Hello?
Yeah. Can you?
Sorry, I was continuing to speak. I didn't realize my phone got disconnected.
Oh.
Sorry, I don't know where I got lost.
Mr. Aditya Jawar was asking another question, sir.
Yeah, so I was responding to that capex. I don't know when it got disconnected.
It was completed.
Okay.
Yes. No, I'll connect with you, Sunil, offline. But just last final question on the RM side. Are you seeing some directionally things started to improve from Q4 and possibly the worst of RM pressure is behind?
So if I have to see only January and February so far, based on whatever we are discussing, looks like things are still going north, specifically for some of the resins and some electric components which are still, there is continuous price increases. But in some of the commodities, the messages we are getting is that things might stabilize here. Too early to say whether they will cool off. But what increases we have seen in last 2 quarters, we might not see in the current quarter.
Okay, perfect. That's it for me.
Thanks, Aditya.
Thank you. The next question is from the line of Ronak Sarda from Systematics. Please go ahead.
Yeah, hi Sunil. Am I audible?
Yes, please, go ahead.
Yeah. So first question on the alloy wheels. Firstly, what was the production for two-wheeler alloy wheels during the quarter, and how is the run rate now?
And second?
And second, on the entire stake increase, Kosei announcing it rights towards Minda Industries. So how is the relationship developing? I mean, is it because you've seen in the other JV Kosei Minda, there have been impairments there as well. So is it? I mean, are we looking to increase the stake to almost 100%? And again, I mean, a touch on the technology side. Have we fully absorb the technology, and how the things should look going forward?
Right. So Ronak, first point first on alloy wheel production during the quarter for two-wheeler is roughly around 60 to 65% of our capacity from the 3 lines. 4th line has just been commissioned. So that's on the capacity for two-wheeler alloy wheel. In terms of stake increase, definitely the relationship is very, very strong. And I think it was, if you remember, in last year in Kosei Minda Aluminium, we had reduced our stake from 30% to 18%, right. And Kosei, which is the Kitty Japan, had put equity in Kosei Minda, which obviously at that time we chose not to participate in that fundraise, right? So the same amount sort of we have raised in Kosei Minda, where they have done a renunciation of their right in favor of Minda Industries. So overall, what happened because of this is that if I see from an independent shareholder perspective, is in the loss-making subsidiary, you reduced your stake, whereas in relatively better company, we have been able to increase our stake from 70 to 77, and that too at 10 rupees a share, which I'm sure the delta versus the fair price, what it could be.
Got it.
And in terms of relationship, I can assure you, the relationship is very, very strong, and there is no iota of doubt on our relationship. In fact, both have been supporting each other very, very strongly for every product, every business. Even in fact, if you remember that 2.5, 3 years back, we had set up another subsidiary called Kosei Minda Mold, which is the mold manufacturing JV locally. I think that shows the confidence of the JV partner. Otherwise, normally they don't do that in other JV relationships, because that's where the heart of the technology also retains, which is already we have a subsidiary in next to the casting plant in India.
Got it. No, just wanted to understand, them increasing stake in a much smaller company and reducing their stake here. So that's what I want to understand. So just a clarification on the two-wheeler alloy wheel production, 65% of the 3.6 million capacity, or
no, of the 3 lines, because 4th line has been commissioned, so obviously not much of production from the 4th line.
Okay, right. And the run rate looks to inch up again, or how would be,
Yeah, so as I said, in addition to the key customer, we all know about that, Bajaj. So we have also started 2 more customers sort of starting uptake from that plant. In fact, as we have been discussing, we have been very fortunate to get a lot of orders in that business, and we know that as a country we are importing almost 50% of our requirement in two-wheeler alloy wheel. There is huge potential, and that's why to meet that kind of demand, the board had approved in last quarter increase of capacity from 3.6 to 4 million wheels to almost 5.6 to 6 million wheels. Obviously, the number of wheels depend on the weight of the wheel, but in terms of the casting capacity, from 13,000 ton to almost 19,000 ton now.
Right.
Sorry to interrupt you, Mr. Ronak. May I request you to please rejoin the queue? We have participants.
No, that was just the first question. Can I take the second question?
Please go ahead, sir.
Yeah, thank you. The other question was on the financial side. If I look at a couple of things here, one on the RM side, you answered it partly, but this is one of the highest RM per sale for us in, let's say, almost 5-6 years. So I mean, is it there is some under recovery as well, which would kind of get settled in the 4th quarter, or should be the run rate going ahead? That's one. And the tax rate also looks pretty large, almost 30% odd. So if you can guide on that, because last year we were at around 25%. So 2 questions there.
Yeah. So first on the RM, Ronak, as you know that as I just said, the prices continues to bump up in the last quarter also. So even though we would have got from our customers the average commodity prices for Q2, the Q3 spot being higher had a big impact on financials for the quarter, same what we saw in the previous quarter. So once we see the prices stabilize for consecutive 2 quarters, then actually we will see what is the real RMC. Because if the spot is higher than what you are getting from customers, that obviously hits your RMC. So that's one of the major factors. And with prices for commodities still sort of little bit inching north and not sort of cooled off significantly, we might have some impact further in Q4. But once there is a stabilization, we will see some improvement in terms of RM as a percentage of total revenue. In terms of tax rate, yes, you are right, Ronak, it is high. The key reason being the overseas subsidiary, which is cluttered in losses. So obviously that had a negative impact in terms of the overall tax rate. So your profit reduces, but tax doesn't. And also because of our accrued MAT, we continue to remain in the old tax regime. We are not yet opted for the new tax regime.
Mm-hmm. Sure. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Congrats on new orders. A couple of questions on one is on the PLI scheme. So can you talk about what all products we have applied for PLI schemes and also clarify whether the products under Prevo JV also will we have applied for?
Yes, Dinesh. So we have applied for in the PLI for all the products which are currently eligible, and obviously the products which will be manufactured by the JV also, because there was an option to apply PLI scheme either at a standalone entity level or at a consolidated level. So obviously we have applied for at a group level. So all the subsidiaries of the group, even though they might not have the capex of 250 crores or so, they would still be entitled or eligible for the PLI scheme. So accordingly, the components which will be manufactured in Prevo JV that are also being eligible and applied for.
Okay. And based on this application, any sense on what kind of capex are we looking to commit there?
Yeah, so that capex is obviously only for those components. So be it sensors, controllers, advanced driving assistance systems, reverse parking assistance systems, alternate fuel systems, EV products. So all that put together definitely is more than the minimum requirement of 250 over next 5 years. Not very big, but I'm sure you remember that the government also has indicated that they will be coming up with the second list of components, which is yet to come. So we are waiting for it and hoping that we might have a little more components from our product profile to be eligible for the PLI scheme. So that's where we are in terms of the PLI.
Okay, got it. Secondly, what would be our revenues from pure EV components, say in 9 months FY22? Would it be fair to say on absolute basis that number would be very negligible currently?
As a percentage of total revenue, yes, it won't be very, very significant. If you see at a group revenue of roughly consolidated of around 8,000 crores, I'm excluding the revenues which we don't consolidate because of accounting rules. So if you see our revenues roughly around 10,000-11,000 crores, whereas what we see quarterly is only 2, which is roughly around 8,000 crores. So of that, currently, if FY22, obviously there are not many EV specific products and not volume also. We did have production of BMS and smart plug, etc. But because the number of vehicle is so small, I'm sure you'll factor it. You can make out how much will be the percentage of total revenue. But what we have also charted out is that the products which will be manufactured from the Prevo JV and the number we spoke about in the last call, to be more than 1,500 crores over next 4 to 5 years. Based on our current assessment, the belief is that we should be actually able to do even better than that.
Got it. And lastly, any sense on the increase in kit value on the airbag side, if it actually increases from 2 to 6?
Yes. So in terms of airbag as a opportunity, it is definitely very, very big. It will be almost, if I remember correctly, roughly 3,000 crores of additional revenue for the industry, and we are targeting market share of almost 25%. So that will be the potential opportunity for us in the airbag business additional.
Okay, but any sense on the kit value, how it would go up?
In terms of kit value, you are referring to, I believe, from what you call 2 airbags to
right. 2 to 6.
2 to 6 airbag, right?
Right.
Yeah. So from 2 to 6 airbag, the kit value will expand to almost 3,000 rupees for a PV, which currently I think stands at roughly maybe 1/3 of that, less than 1/3.
Got it. Thanks. I'll come back in here.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi, sir. So firstly, on the aftermarket piece, I think...
I'm sorry, just one thing. I think on the previous Dinesh, instead of kit value, I shared revenue numbers. So kit value will be roughly around 6,500 additional. Sorry, go ahead.
So, firstly, on this aftermarket sales, I think we are seeing very good ramp up this quarter, 262 crores, 17% growth versus last year, same quarter, despite high base. So, is it this year growth is driven by more new product addition, or it is still the older products which are giving us more revenue in terms of growth as well, and also in terms of network where we are today versus what we will say versus March?
Yeah. So Ashutosh, you are right. I think we have been very aggressive in our aftermarket. I think we have been speaking on this for almost a year and a half now. So our aftermarket, which is a B2C sale, continues to do very, very good. It is driven by 2 key factors. First is, as you rightly mentioned, because of addition of new components, which is seating and alloy wheel. And let me tell you, alloy wheel, actually we could have done better, but because of our existing capacity itself is able to sort of meet OEM demands and running almost at capacity. We maybe lost some opportunity for aftermarket, but we are, with the additional capacity, we'll be able to even increase our sales in alloy wheels in aftermarket. Seating also, there is a big opportunity. We just started a few months back. So we are onboarding the dealers for that gradually. And also the increase is also because of a little bit of gains in the share of business in our traditional components, which is lights and switching, and also some bit of exports. So I think it is in all corners, little bit contribution is there. And that's why we've been able to hold on to our guidance of double-digit high teens growth. And going forward, as I said, that we are undertaking a huge branding and promotion exercise. So with that, we expect or we plan to sort of even increase our growth year on year in the near future. So as of now, we are almost, if I see run rate, number 2 in B2C sales in the country. And our target first is to be number 1 in terms of B2C sales.
Okay. And you mentioned that alloy wheel is running sort of capacity. So you want to say that last quarter, out of 240,000 capacity per month, we operated almost close to full?
Yes. For 4-wheeler, we have been almost running close to capacity.
And the next leg will come when basically the additional capacity in 4-wheeler?
So the initial expansion which we announced of 60 KT per month in Bawal, that should be up and running in the first quarter.
Okay. So from there, I think you see the further ramp up. And this, you also mentioned that you started supplying to this Korean OEM. So this is, I think, the extra capacity, right? This is at Gujarat.
Yes, that's the LPDC one.
Yeah, LPDC one. So that is not, that reflection over there must be lower.
No, that also is started now. And in fact, there also utilization is almost, I would say 80% of the capacity. And there also, with this new business, we will be able to utilize the capacity maybe in 6 to 10 months from now on, because the new orders, obviously, as you know, is linked with the upcoming model.
Okay. So it seems like the way things are going, maybe you need to announce another expansion in next 1 year.
Yeah, for LPDC, I think that's the target I think we shared initially also, that as of now we are putting a very small line of 25,000 wheels per month for LPDC, and as business grows, we will see how we sort of cater that demand, because currently that is put up in Gujarat, which is primarily only the casting line, but entire machining, painting, everything is common, aligned with the GDC facility. So as volume grows, we'll see how do we sort of meet that incremental demand.
Okay. And lastly, I want to understand on this wireless charger, what would be the content per car basically, and can you share the revenue that you're deriving right now from there and how we can see ramp up of that?
I'm not sure a wireless charger specific. We have shared content in past, Ashutosh. Let me check that my minutes. But
can it become a sizable business? Because I think in all the new
absolutely. So this is part of our controller business, Ashutosh, and it definitely has a huge potential. We have already got business for wireless charger from 2 large OEMs, and it has been increasing from 1 model to 2 model, and we are seeing a good growth in that business.
Okay. Sure. Thank you. Thanks a lot.
Thank you, Ji.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Good evening, and thank you for the opportunity. My first question is on the PLI scheme. Could you give some sense of on what products have you applied for, and how would the investments pan out there for that PLI scheme?
Okay. So I did share, Mukesh, initially. Let me repeat that in terms of what products we have applied. So basically it is the sensors, controllers, ADAS, RPAS, and the EV specific products. And also, as I mentioned, that we do expect this second list to come out soon, and hopefully if there is a little more, then those components will also be added. And in terms of investments, as I mentioned, that the minimum requirement was 250 crores over 5 years for these eligible components, even though our capex is much more. But these eligible components, we will be having an investment more than this. You know that even only in the Frio JV investment was more than the threshold.
Sure.
We will be meeting those guidelines.
Right. And the scheme doesn't really specify that it should be for exports, so it could be both domestic and exports, right?
Yes, it doesn't specify it has to be export. It is basically over a base year, how much incremental you are producing and selling. So there is no demarcation of domestic versus export. In fact, on exports, you actually have a better incentive.
Okay, right. And next is on the airbag thing. I mean, given that it might come into effect from October, is any sense of the kind of orders you might have to, you're already starting to get on this, and any capex in the TG Minda entity that you might have to do?
Yeah, so Mukesh, we definitely would need to do some bit of capex there, but let me tell you, frankly, while government has set a target of 1st October 22, what we hear from our sources is that people are obviously not ready for, not everybody is ready for this 1st October date, because it is not only about fitting of airbag, it also means a lot of design changes, power, a lot of infrastructure in the car had to be upgraded. So I believe people have been approaching government. I'm not sure formally whether or not, but we might see some relaxation in this date, but over a medium term, this is regulation is going to be there. It's 1st October or 1st April won't make a big difference, but it's a big decision from government towards passenger safety, and it's good for our business. So we are very positive on this.
Right. And just the last bit, just a clarification of the partnership firms that now we are investing in. Do they largely generate all their revenues only from Minda Industries now?
Yes.
Okay.
That's what I was saying, that it is A, being done only at very clearly book value, and B, it will reduce related party transactions very significantly.
Yeah. No, so I want to check if they have any other external revenue at all.
Nothing material, maybe a little bit, but not very sizable.
Right. That's it from my side. Thank you.
Thank you, Mukesh.
Thank you. The next question is from the line of Nikhil Kale and from Axis Capital. Please go ahead.
Yeah, thanks for taking my question. My first question was on the LED headlamp order. Can you just put some more color on the order size? What is the OEM? If you could just provide some details on that.
So, Nikhil, I'm sure you appreciate we don't take customer names normally, but yes, I can share the quantum. So this LED business, once it get into SOP, I believe in FY24, the annual value from only this one model will be roughly 60 crores per year.
Okay. And the existing order book, has that started getting into production, or it will start at FY23? Yeah, I think.
No, you are referring to this order, or you are referring to generally the LED business?
The existing LED order book, I think we had orders from a couple of Japanese OEMs.
Yeah, so I think, Nikhil, is that all these LED businesses we have got in last 10-12 months, they are all linked to the upcoming model launches for all our customers, which are slated FY23-24 onward. So obviously, it will be productionized as and when the customer is ready for its model launch. And also, we are putting a specific plant for meeting this demand in Gujarat, which is under construction. Hopefully, that plant should be ready by end of June this year.
Okay. And my second question was on the airbag side. So can you just help us? Who are the key customers there? Is it spread across the customers that we have, or are there a couple of main ones, let's say Maruti or Toyota? Those are the key customers there. And also on the airbag side, the content that you mentioned, if I heard it right, it's 6,500 for the incremental 4 bags. Is that correct?
Yes, you are right.
And so that's the entire airbag that we manufacture and supply, right? Or are we doing this a few components there?
No, so entire airbag we give along with the inflator airbag, the entire kit value. So this is done in our TG business where we do fitting in the steering wheel. So steering wheel which goes, it's already fitted with the airbag, inflator and everything. But obviously for other things you have to supply with the inflator and the airbag. So in terms of customers, obviously we are working with almost 4 or 5 key OEMs in the country, be it Suzuki, be it Toyota, be it Tata, be it Mahindra. So I think we are working with all the major ones domestically.
And broadly, overall in the industry, what would be our kind of market share on the industry?
So as of now, our market share obviously is very less, and I'm being very candid about it. Our market share is roughly around 14%. And 13-14%, and we are targeting to take it to north of 25 in next 3 to 4 years.
Okay. Fine. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of Mumuksh Mandlesha from Emkay Global. Please go ahead.
Yeah, thank you so much for the opportunity. So in first 9 months, what is the revenue for the two-wheeler alloy wheel, and what do you expect for FY23? Hello?
Mumuksh, can you, your voice actually just went off a little bit in between. So you're saying, if I heard correctly, you're saying what is the revenue of two-wheeler alloy wheel, then it was just a pause.
Two-wheeler alloy wheel in first 9 months, and what is expected revenue in FY23?
Oh, okay. So first 9 months, our two-wheel alloy wheel revenue was roughly Okay, it is 200 crores. Ankur, let me know if I'm wrong. I think it was roughly 200 crores for first 9 months. And you mentioned for next year.
Yeah, next year.
So next year, since this fourth line is now commissioned, I think we are definitely going to target between 90 and 95% of our capacity in next financial year, which should be more than 450-500 crores between that.
And sir, similar for sensors also, what was the revenue, say, for 9 months and expected revenue in FY23?
So sensors, last quarter, if I remember correctly, revenue was roughly 50 crores for the quarter. And for 9 months, roughly 140 odd crores. And you are asking next year, right?
Yeah, next year.
So next year, we are definitely targeting roughly around 250 crore kind of range for FY22-23. But maybe I can give you better precise number once we are through with our budgeting cycle next couple of months.
Yes, sir. So is it possible to share what kind of a price hike was taken in Q3 in terms of value-wise?
Price hike in value? You get the point.
I mean, a price hike taken in Q3. If you can share something.
You are saying overall, how much is the price increase impact?
Yeah, price. Yeah.
It is roughly around 8-9% of total revenue.
8 to 9% total revenue. Okay.
Sorry to interrupt, Mr. Mamaksh. May I request you to please rejoin the queue? We have participants waiting for their turn. Thank you. The next question is from the line of Siddharth Bera from Nomura. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So first question on the margins. Just wanted to understand, has there been any difference between the, if I look at, say, segment-wise margins, four-wheeler and two-wheelers, given that two-wheeler as an industry volumes have been under pressure over the last few years, has there been any structural change in the margin profile for you, the components you supply currently between these segments?
Sorry, I didn't hear very, very clearly, Siddharth. So if let me repeat if I understood correctly, as you correct me. So you are saying that what is the impact on margin because of the two-wheeler volumes versus four-wheeler volume? Is that right?
Yeah, because two-wheeler industry has not grown. So, I mean, the ability to raise prices to achieve our sustainable margins of 12%. So has there been any sort of difference or sort of resistance to raise prices between these two segments?
Not really, Siddharth. So what happens is that, yes, there might be a pushback, but because we have got very clear agreements with our customers, it is not linked to volumes. So whatever is the price increase passed through as per agreements, I think we have secured almost from all the customers. Yes, you are right that from industry perspective, quarter on quarter also there is a decline in volumes. I think last quarter as industry we produced something like 2 million two-wheeler wheels, whereas this quarter it was 45, so almost 14% drop quarter on quarter. But that does not mean that there will be any impact in terms of the price increase which we have to sort of get it from our customers. So no impact from that perspective.
Okay, got it. And second is on the sensor business. So if you look at the last few quarters, we have done in that range of 50 to 55 crores every quarter. So what will be the driver from here which will lead to a strong growth in the revenue?
Yeah. So there has been new business what we have secured, which are getting broadly in line or in production from the next year, and also there is expectation that the volumes also will be better next year compared to this year. So I think these two will be the key drivers for our sensor business.
Okay, because PV revenue volumes actually on a quarter on quarter has gone up, but our sensor revenues have remained flat. So just wanted to understand.
Not really. Actually, sensors revenue quarter on quarter is almost down by 10%. So previous quarter we did 556. This quarter we did 50. It's almost like 5 crore lower in Q3.
Okay. So any lumpy new order win which is there, which will come from FY23?
Yeah, that's what I'm saying. There are some new business which will get in line sometime from next fiscal year, which will provide additional revenue growth versus the industry volumes.
Okay, got it. Okay, sir. I'll come back to this.
Thanks, Siddharth.
Thank you. The next question is from the line of Vishal Srivastava from Swan Investments. Please go ahead.
Hello, sir. Thank you for taking my question, and congratulations for a decent set of numbers in this challenging scenario.
Thanks, Vishal.
Sir, my question is regarding the alloy wheel business. Sir, what has been the gross block invested in four-wheel and two-wheeler and alloy wheel business so far?
I don't have that numbers handy, Vishal. I'm sorry. Maybe Ankur can share with you offline if you don't mind.
Sure, sir.
Two-wheeler I can share with you because two-wheeler we know it is roughly 25 crore of total capex which we did for the plant. But four-wheeler has been continuously, we have been sort of having investments. So four-wheeler we can share you offline.
Great, sir. Fine. Sir, my second question is regarding, can you share, what would be the breakup of four-wheeler alloy wheel capacity in the industry for LPDC and GDC?
Yeah, I think we have it again, maybe offline if you don't mind.
Sure, sir. I'll touch base with Ankur regarding this. No problem, sir. Thank you. Thank you so much. Thank you.
Thanks.
Thank you. The next question is from the line of Vibhishan Jagtap from Canara Robeco Asset Management. Please go ahead.
Yeah, hi sir. Good afternoon. Thanks for taking my question. So my question is on four-wheeler alloy wheel business. So how much does the per pair cost now for the four-wheeler alloy wheel business? And after seeing that 60% increase which you mentioned in the presentation now.
Per wheel cost?
Yeah, per pair four-wheel cost.
Very, very difficult to answer because every model will have different cost because it depends on the weight of the wheel, not the wheel cost per se. So the bigger the wheel, the more the metal, it's linked to how much of alloy goes into the casting of the wheel. So very, very difficult to say how much will be the cost. So if a wheel is weighing 10 kg and a set is like 40 kg wheel, will have very, very different pricing versus a wheel which is weighing overall say 60 kg. So there's no standard number for that. I'm sorry for that.
And sir, how is the penetration now for the industry currently for four-wheeler wheel?
So penetration is very good. In fact, when we started this business 5-6 years back with Minda in North, the penetration was roughly 12-13%, which today is more than 30% currently. And I think we have been talking on this earlier also that the developed markets, the penetration is almost like 80-90%. So there is a huge room for growth for next few years.
Okay. And when it comes to two-wheeler, how is the import is coming down now for the industry?
The imports are still there, unfortunately, because obviously the domestic production is catching up. I don't have those numbers readily available. Last, which we saw a year back, was almost like 50% plus kind of numbers being imported. But recent data, I think we need to pull it out.
Okay. And sir, just lastly, if it is possible to give a broad breakup of that other segment, that is sensor. I think you already shared the number for the sensors, but for the other segments like controller and the other division.
So sensor controller put together, the controller is very small as of now. Sensor controller put together is roughly around 65 crores. So last year, the controller did only 15. Then you wanted for what you call the other products, right?
Yeah.
So if you don't mind, can that number be shared offline?
Yeah, sure. No problem. Thanks.
Right. Thank you.
Thank you. The next question is from the line of Rajesh Kothari from Alpha Accurate Advisors. Please go ahead.
Good evening, sir. Sir, I have two questions. My first question is, you mentioned that, the raw material prices, your contract versus the spot prices. So what is our raw material procurement policy normally?
So the raw material which we buy is different for different commodities. So what we try and do is we try and match ours versus customer, but that at times is not possible. We try and do it for maybe alloy, but what happens is that if you are buying resin, if you are buying any other material, So you have inventory of maybe roughly 15 days, 10 days to 30 days based on component to component. So if you are sitting in November, you will end up buying at the spot price versus the customer giving you the previous quarter average. So that's how you actually end up having that delta of what you get from customer versus what you pay during the quarter, and that is part of the cycle. So when things goes on a price increase trend, you get negatively hit, and when things soften up, you also would get a positive impact of it.
So are you trying to say that if the current prices, let's assume for a moment that it remains same, then fourth quarter, when I say same means not equivalent to third quarter, I'm saying as of now, where we stand, because we're already in kind of a mid-Feb, then do we see fourth quarter improvement in margins, or you think to come back to the normal margins may take a few more quarters?
Yeah, as I said initially, Rajeshji, so if you note that still the prices are a bit higher. In fact, electronics is significantly higher. Still prices are going north, and also for some of the commodities. So as of now, we are not in a steady state situation. So there will be some impact, but might not be same as what we saw in the previous quarter.
Understood. And sir, my second question is with reference to the industry size. Is it possible for you to share the what is the total industry size of, say, sensor industry? And I don't know, when I say in a normal market, I mean FY21, of course, first quarter was not working, so I don't know how to put it. But on a say quarterly annualized kind of a number, what would be the size of the industry?
For sensors?
Yeah.
Very difficult to say, because again here sensors, while we can give you for the components of the sensors we produce, there are multiple types of sensors which go into vehicle now. If you see, the sensors have been increasing almost on a quarterly basis or annual basis in every model launch for a customer, because that's what a common man wants. So today a top-end vehicle has more than 150 sensors. So it's very, very difficult to say what is the overall value of sensors. But if you want, if you are interested, we can share with you separately what is the industry, the sensors we produce. That can be shared.
No worries. I'll take it offline. Last question, if I can squeeze. Sir, our FY20 revenue was roughly about 6,000 crores. 21, of course, was impacted. 22 also partially impacted. So can we see that by FY24, the 6,000 crores can become like 12, 13,000 crores kind of revenue in terms of the overall target estimate, because you have already the order books and the new customer and expansion. So is it that a safe assumption broadly?
So Rajeshji, I think we spoke on this earlier also. It is very difficult to say absolute number, because our endeavor always has been to outperform the industry growth. So if industry remains where it is, right, then our idea or our strategy is always how do we increase our sales, which can be through multiple sources, either exports or maybe increasing our share of business or increasing kit value. So we have been working all that, and that's why if you see for the last quarter, the industry volumes were down 21% overall, whereas our revenue is up 9%. Yes, some component is also because of price increase, but even if you exclude that, I think we have grown significantly compared to the industry growth. So if that trend continues, I've not done the math, but if it leads to that number, we should reach that.
Great, sir. Thank you, sir. Wish you all the best.
Thank you, Rajesh.
Thank you. The next question is from the line of Deepak Khatwani from Girik Capital. Please go ahead.
Yeah, thanks for the opportunity. My question has already been answered.
Thank you, Deepakji.
Thank you. The next question is from the line of Suraj Fatehchandani from Compound Everyday Capital. Please go ahead.
Thanks for the opportunity. Actually, in the unaudited results on page number 14, if you could turn to that, in the 7th point in auditor's report, I'm seeing that the sales are 2.11 crores in 4 of your subsidiaries and profits are around 9 crores. Am I missing something here?
I don't have that handy, Suraj, unfortunately, in front of me. What is 2 crores you are saying and 9 crores?
Yeah, so the note says that for 4 subsidiaries, interim financial results are revenue 2.11 crores and total net profit after tax of 9.73 crores.
Okay, so there might be a typo. We'll get it correct.
Yeah.
Thanks for highlighting it. It was not possible that we have 9 crore profit on 2 crore revenue.
Yeah. No issues. So, secondly, I wanted to ask, so I have been following this company recently, so would you be able to tell me what was your investment for the stake of 70% in Minda and in which year?
So Minda was a fresh company. It was not an acquisition. So it was a company established afresh. So it was not acquired actually.
Mm-hmm. So what would be the investment amount or the capex you put in which year?
So I think we just spoke about that, Suraj. I think somebody else also asked how much is the capex we have done so far in four-wheeler and two-wheeler alloy wheels. So two-wheeler, as I said, roughly 25 crore. Four-wheeler we can share with you offhand because there's continuously we have been investing in that business. So I don't have that number handy. So if you don't mind, you can share that offline.
Okay, no issues, sir. Thank you.
Thank you, Ji.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Sunil Bora for closing comments.
Thank you. Thank you, Rutuja. I would like to thank everyone for joining on the call. I hope we have been able to respond to all your queries adequately. For any further information, we request you to please do get in touch with us. Stay safe, stay healthy. Thank you.
Thank you. On behalf of Minda Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.